about the portfolio, answering some of your questions. We're gonna cover Google, Apple, Novo Nordisk, Eli Lilly, and much more. Thank you for your questions. Today we answer Luis Gudema. Hey Simon, how you doing? I saw that your investments are surprisingly conservative for a crypto guy. Several of your stocks have underperformed the S&P 500 over the past 5 years. Although it was good to learn about KKR. I invested in Nvidia just 6 months ago and it's already up 60%. I'd swap Google for Apple and check out Lilly and Novo Nordisk. Cheers, Luis. So let's go there. Let's have a look at the first question. Have we picked the wrong stocks because they didn't even outperform the market? If that's the case, well, we should stop investing because then just buy the S&P 500 and chill, right? So let's have a look. In case you wonder how you find out if your assets are beating the market, in TradingView, this is the free view, you click plus here and enter the S&P 500. Now the red line is the S&P 500, basically the market. And the black line will be your asset. So let's compare all the core holdings to the market. Okay, our core 9, Amazon beat the market. KKR beat the market. Moody's beat the market. Visa beat the market. Meta beat the market. And they're all beating by far. In case you're listening, there is a huge gap between the market and the performance of our core assets. MasterCard beat the market. MSCI beat the market. Salesforce beat the market. Now we go to our additional stocks in the portfolio. Tesla beat the market. Nvidia beat the market. Corpay is slightly below market here, so you're right. In pricing terms, Corpay has been under the market. Sophia Genetics has been under the market. Google beat the market. Kinsale Capital beat it. BlackRock beat it. Booking beat it. CCCS is below market. And you are right, Luis, we have 3 companies below market, which is Sophia, Corpay, and CCCS. So I'll do a full video on each of those and to show the reason why we are invested in those and why we don't have to worry about them. Also, most of them were above market, so we don't have to worry there. Now, your next question was, should we switch Google to Apple? This is something that many people are thinking about right now. I don't own Apple right now and I don't plan to, but let's look at Google and Apple. Google is in our core portfolio. Apple is not. And many people right now are buying Apple, except Warren Buffett, he sold half of it. But many people are buying Apple right now with the thesis that the new iPhone will have a significant, let's go to Apple, this is Apple. They think that the new iPhone will have a significant uptick, basically a huge upgrade cycle, because everybody wants to have the new AI on it. The new phone will have AI on it, and so everybody wants it. So we go from a Siri, which is the most unused assistant on the planet, to having something that's incredibly good. And this is why everybody will want the new iPhone. I think it can happen, and that's why it's very overvalued right now. I think Apple is worth 183. So right now it's absolutely significantly overvalued in terms of price. So I wouldn't buy it now. Also, what I need from a stock is that it's run well, that is operating income going up, free cash flow per share going up, and return on capital employed going up. If you look at Apple's growth, it's been stagnant over the last 3 years. So yes, it is well run, But no, I don't see an innovation plan, and I don't see the breakthrough. So I understand why people go into Apple. I understand even more why Buffett and others stay out of it, or at least he reduced by half. If we compare this to Google, look at the operating income of this company, much higher growth. The value, I think it's worth 158 right now. So it's at fair value. So it would be a much better entry point. And you see all important financials that we look at going up month over month. So you have the operating income going up, which includes growth, right? And then you have free cash flow per share going up, and you have return on capital employed going up. So if I have the choice between Google and Apple, I go with Google, and this is reflected by the current portfolio. The other question was, have a look at Novo Nordisk and Eli Lilly. Those are very solid companies, and I know that Terry Smith owns a lot of Novo Nordisk and is very happy with it, but also Terry did not add to Novo in Q2. Let's look at Novo Nordisk. So I really like the operating income. Everybody says it's a duopoly in terms of diabetes, but I cannot confirm it because I don't have enough deep knowledge about the drugs world. So I don't see it. I cannot either confirm the duopoly nor invalidate it. I don't know enough about that space. That's why I'm not in that space. But if we just look at the financials, we see that its operating income is really good. The free cash flow per share is declining, and the return on capital employed is declining. So this might not be the right time for me to enter. Even if I would understand enough to buy it, I would not enter it now. So I would be late to the party. In terms of what's it worth, I think it's worth $111. So it's modestly overvalued right now. It wouldn't be the right time to enter either. Let's go to Eli Lilly. Eli Lilly has impressive operating income. And if you look at the blue line, the free cash flow per share dropped off a cliff. This for me is a huge red flag. In my system, I'm not allowed to invest in a company where the free cash flow per share is falling off a cliff, and it's still going down. It didn't stop falling off that cliff. On the other side, return on capital employed is wonderful, and operating income is wonderful. So yes, it's a great company. It's well run. It has a very solid history. Right now, it's overvalued. I think it's worth $516, and it's far beyond that. So same situation here. Even if I would understand enough about the drugs market to enter it, I wouldn't enter now when it's so overheated. But I agree with you that it's a great company, and it's very well run, because operating income really tells us if a company is well run. So back to our portfolio. Are we on track to double in 3.8 years again? We are in 2024. The portfolio value is slightly above 1 million. So yes, we are on track. It will be hard to do the fifth doubling in 2028. We have 3.2 more years to get there. It's not that easy, but will we? Let's find out together. What is the current portfolio? We have currently mainly a distribution in capital markets, financial services, and software, because that's where I have the most understanding. And the companies right now, we have Booking with 13%, Salesforce 11%, Amazon 8.9%, BlackRock 8%, Visa 7%, MasterCard 7%, MSCI 6%, Tesla 6%, KKR 6%, Nvidia 4%, Moody's 4%, Google 4%, Meta 3.5%. Sophia Genetics, that's the one that did not beat the market, is at 3.4%. But this is a startup, so it will become profitable in 2 years. That's the plan. And Kinsale is at 3% and CCCS at 2.6%. Let me know how your portfolio is doing, guys, and what do you need. I'm happy to receive these questions and answer these questions. Keep rolling.